welcome back. We will discuss what is happening in DeFi, what's going on. We will explore together why DeFi is a paradigm shift in the financial industry as we know it today. Alright guys, and welcome back to ON-DeFi. And today we're going to discuss alpha leaks. So normally we have a concept that we talk to different people in the DeFi space. Today I will take you on a journey throughout what CRV is, Curve Finance, and what happened to the UNI token. And we're going to discuss a cool yield taking strategy where we can use our newly our UNI stimulus check to actually earn some more yield and support the ecosystem at the same time. All right, let's go. So this channel will be a bit up-paced. It's a very quick market bites. The market's moving very quickly. So if you want to learn the basics and if you want to get this unfair knowledge advantage about how to trade and how to use decentralized finance, I recommend you to go to my course, the DeFi 101 course and the DeFi 201 course. You can find the link below to the Ivan Tech Academy where I give the DeFi 101 and 201 course, and go ahead, take it. Boost your knowledge, get this unfair knowledge advantage, and let's make some gains in the markets, right? All right, so today we're gonna have a quick look at the markets and see what is going on today. We're going to talk a little bit about some DeFi tooling that I use personally. We're going to look at the Uniswap and UNI token event that happened. This is a big event and it's important for us to take note of that. And we're going to talk a little bit about some strategies. So we're going to look at some Uniswap yield hacking strategy that I use personally as well to actually provide liquidity to the Uniswap token and earn some nice Mooniswap tokens at the same time. We're also going to talk about the CRV changes and how to stake your CRV, boost your yield, and get an extra interest on the CRV tokens that you generate by being a liquidity provider for different Curve financial protocols. All right, guys, so let's look at the markets today. We have a little bit of bearish sentiment, and the website I personally always like to go to instead of like the CoinGeckos or the CoinMarketCaps, I really like to watch CryptoWatch. This gives a pretty overall insight and a lot of more data, and you can actually also configure APIs, etc., etc. This will be maybe we can review this in depth in another session. As you can see here, it gives you a bit of a outside and a bit helicopter overview of the market, and we can see here we have a little bit of bearish sentiment. The price is going down a little bit, and we can see that also in the Bitcoin charts that we're actually hitting some resistance levels. So it's important for us to see what's going on, and I would say let's not buy high, sell low. We need to look at the overall market trend. And personally, I'm here for the long-term investment and for the long-term strategy that I mostly apply in my investment strategies. All right, so let's look at DeFi polls, because here we can see an interesting development. Although the market is down, actually the capital being locked up in DeFi is climbing. And as you saw maybe in some news, there is a DeFi index launched. We'll also talk about this in a separate video. So DeFi is booming. Let's take a look at the top 100 DeFi market cap, right? We have DeFi polls, which I also cover in my DeFi 101 and 201 course, and we have the CoinGecko top 100 DeFi market cap. Here we can see the prices of these coins are unfortunately down, but we can see the locked up capital in these protocols going up. So that means that the price goes down, but the capital and the usage of these protocols actually go up. So this is, my opinion, a good moment to maybe consider buying some of the DeFi assets, DeFi capital assets, and add them to your portfolio. All of this is not financial advice, it's just reviewing everything that's going on in the market, but I see an opportunity right there. Okay, so some other tooling that I use, so I use CryptoWatch, I use DeFi polls, I use the CoinGecko DeFi 100, and also if we go a little bit more in the weeds of the yield farming and yield hacking, there are some cool tools that I personally use to get the best yields for the assets that I'm currently holding. And you see here all the sushis and creams and YeFis, etc. I do look at them because I do want to keep up, and I want to understand what's going on in the markets. Yeah, right. But I actually have quite a conservative strategy. I do deep code reviews before I actually enter some of these markets, and I also want to be sure that I do not get exposed to impermanent loss. More about that in a bit. Also, when we go to the DeFi, the yieldfarmingtools.com, we can see a lot of different resources and tools that you can use. They're all will be built out. Here's a nice overview of different gas prices. Here's some tools with some permanent loss calculators that you can actually use when you start providing liquidity, some of these assets. So this is really, really handy and really, really nice to do that. Also, something new is this yield farming list. So this is actually a list of tokens that are now actually coming up that are doing yield farming. You really have to watch out with some of them. So you see Uniswap is here, a lot of, in my opinion, scams as well. So this is really, really, really dangerous territory, right? Personally, and also in the DeFi 101 and 201 course, when all this yield farming and all this yield hacking strategy started, when Compound actually was launched, I said in my channel, in my courses, I said, just go to Curve Finance. This was before the token launch of YeFi, and stake some YeFi. You can get a nice return. At the moment, you get 37% in Curve tokens and 3% APY on your assets. Maybe a little bit low. Maybe you want to switch it over to SUSD, which is a little bit higher. And you can see here all the different yields that you get. It was back then was my strategy, and kind of still is where I mostly farm different assets, and I actually provide different liquidities to different pools, right? All right, so let's get into the news very quickly. So these are the tools that I normally use. All the links will be in the description below, where you can actually now find some more information about yourself. And in different channels and different episodes, we will go more in depth in different tooling, and maybe we're gonna explore some different yield farming opportunities, right? We are now going over to the new Uniswap and the new token interface that we got, right? So let's take a look. Like, we got an airdrop of 400 UNI tokens if you have provided some liquidity using Uniswap. You would have been gotten 400 UNI tokens airdrop to your channel. These UNI tokens were mostly airdropped if you hold or used the Uniswap protocol before September the 1st. So this is really cool. Like, everybody that actually followed the course, or everybody in the community that actually interacted with Uniswap, is now rewarded, right? You can claim your UNI tokens by actually just going to the Uniswap website, and then you can check out if you got some of the UNI tokens yourself. I call this the ownership economy. More on that in later videos. So this is called the ownership economy. In this ownership economy, you will basically get paid to use certain protocols. All right. So in the upcoming part of this video, we're going to look at a strategy where you can actually stake your UNI tokens in a liquidity pool. In this liquidity pool, you can actually calculate the different, you can calculate your permanent loss, and you can see how to provide liquidity, right? Okay, let's take a look at that. So we have the UNI token, and now if we actually want to do this yield hacking strategy, we go to MoonisWap. And MoonisWap is giving us a MoonisWap is basically a fork of Uniswap, and they provide like a different analogy where they give you, on the one hand, they give you a interest over the slippage in the protocol, on the other hand, they give you the rewards on the trading volume in the decentralized exchanges, right? All right, so. And this protocol is actually built by the 1inch team. I do have a lot of trust in the people from the 1inch team. And you can find out more about the the 1-inch DEX and exchange if you go to their website. So the 1-inch exchange actually announced that they will also do an airdrop of Mooniswap tokens. So in my opinion, what is best now in this ownership economy, try to gather as much high quality products as possible. Mooniswap, Uniswap, Yearn Finance, CRV Finance, there's a lot of these protocols that actually are of high value and high quality for the community. In these protocols, when you farm it, when you provide liquidity, you will get rewarded. You will become part of an owner. So this is about building an ownership economy, right? So how do we do this? Well, we go to pool, we say we want to add liquidity, we say, all right, we want to have ETH and UNI tokens. Then, if we connect this actually to our MetaMask, we can provide ETH tokens, Uniswap tokens, and we start providing liquidity to the pool of the ETH UNI pool. And at the same time, on the back end, earn some 1-inch tokens. When you want to see if you actually go here, and let's go to the analytics, it's very similar how Uniswap works. We can see the, if we go to the unit pair, here we go, we can see the liquidity is quite up. And you see here the fees. So the fees are $1,000 plus another almost $700, right? And on Uniswap, you only get the trading fees. In MoonisWap, you get trading fees and fees over slippage. If you want to learn more about the exact technical details of this, I would recommend you guys going over to the blog post that I link in the description below. Right. Here you can actually also see the different APIs that we can actually earn. You can add the different tokens here. Let's add MoonisWap. And you can see all the different interest, all the different APIs that you get by providing this liquidity. So head over to MoonisWap and also provide some liquidity there. And you already have Uniswap tokens, but you also will earn some MoonisWap tokens, and at the same time provide liquidity and earn extra interest with that. So that's, in my opinion, really cool, really cool. All right, so now let's also head over to what's going on with the Uniswap liquidity mining programs, right? So you provide your ETH and UNI pairs, so I would recommend that. And at the same time, I would recommend is actually farm and provide some liquidity to Uniswap and earn some UNI at the same time. You can do this by providing ETH DAI pools here in this interface, and then you can interact either directly with the smart contract or with this interface and provide your liquidity tokens in there. All right. So also what is really interesting, you can see here that recently the stablecoin DEX curve will kick off a dividend on its CRV tokens. So we saw this whole debacle where we had a lot of like projects that doing yield farming were like, yeah, we're gonna do a more efficient way of yield farming, etc., etc. And they're basically, a lot of them were using curve. So a lot of the protocols in all these yield farming crazes, right? Pickle, jar, or whatever, the only thing that they were basically doing is farming the shit out of curve, providing all the liquidity that you provide to this other protocol and farm curve. Well, curve wanted to put a stop to that and said, oh, wait a minute, that's not why we do it. We want to have users, and we don't want to have like other protocols stealing funds and giving it to users and then using the funds that we tried to incentivize usage with the incentivizing the usage for another protocol, right? So what they did, in order to get the highest API, you need to stake in the DAO, and you can find that here, we will do that in a bit. You need to stake some of your curve tokens, lock them up, and then you can use them in voting for proposals, etc., etc. At the same time with this, it stimulates people to actually become an active participant in the CRV, Decentralized Autonomous Organization. All right. So I would recommend that you guys, like if you provide liquidity already to Curve Finance, I would really recommend check out this website and see how you can get the highest interest rates on your assets, right? Okay, so how does this exactly work, right? So you can actually go to use Curve. So here you can actually see all the different the different pools. And you can see here that, as you can see here, that the max for 2.5 per veCRV is these, so like the compound or USDT, so these are the different volumes, and you get basically a percentage of the interest in your assets. It sounds a bit complicated. I think they explain it better in this article. Here it's, yeah, more details and instructions can be found in the curve documentation here. Each trade on the platform incurs a 0.04 trading fee, which is left in the pool until liquidity providers remove their share. With this shift, trading fees will be split between liquidity providers and veCRV holders. All right, so how does this work, right? Over the last weeks, fees on Curve have varied between approximately $70,000 and $150,000 per day. The project just hit a new all-time high, a volume of 400 million, right? For 2 million Curve tokens, for now 2 million Curve tokens are distributed to the LP annually to an amount that will drop by 50% each year. But basically, how you need to see it's like the trading fees that occur, part of it will actually buy back CRV tokens and drop that to the people that are staking their CRV tokens, right? You can read more in-depth information about this on their website and in their documentation, right? You can see that here. In order for yourself to check out how it works, you go to Curve Finance, you go to the DAO, and here in the DAO you connect your MetaMask account. This is just a test account that I use, so don't worry. And yeah, here we go. So it's loading up all the different data, and it's pretty cool. You can see a lot of information in this portal. It's a gold mine of information that we can see right here, right? All right. So if you, for example, would have staked any liquidity in one of these pools, you can go here and you can boost your your interest that you get on your curve by going here, locking it up, and then clicking the booster button, and you boost your interest rate. So, okay, but how do you actually lock this? Well, you go to the locker, come here, you have your CRV tokens in your account, and you lock them, for example, 4 years, you create a lock, and then from there, your interest will be calculated and will be distributed. Yeah, so this is basically what the Curve Finance token did. So they're trying to evolve and defend themselves against all these different attacks from different angles, from different protocols, and they're evolving towards this new DeFi industry. All right, guys, so if you want to learn more, this is really a quick bite of information that I drop here for you guys. If you want to learn more, if you maybe want to get a private consultation, you can always go to Transform ON-DeFi, and there you can come in contact with me and you can book a call with me and we can go over your portfolio, or we can check out all the different possibilities that we have in decentralized finance. All right, guys, I really like this format. Let me also know in the comments below what you think. Was I too fast? Was I too slow? Do you want me to cover a specific topic? Then just drop it in the comments below, and yeah, I will start a video on it, and together we will create this new parallel financial universe called decentralized finance, and we're going to lay the ground for a more ownership economy where we will have more economic growth and more economic prosperity for everybody. All right, guys, I hope to see you on our next video, and don't forget to like the video, subscribe, and hit the bell button. See you in the next video, guys. Thank you very much.